Imagine two versions of yourself 30 years from now. One relied on a 9-to-5 job while the other invested $100 weekly in SCHD, a high-dividend ETF. Which one is living their dream life? In this video, we'll explore how this simple investment strategy can transform your financial future. You'll discover the power of SCHD's impressive 12.83% annualized return and how it can build a wealth-generating machine over time. Curious about how much your weekly $100 could grow? We'll reveal a jaw-dropping figure that might just change your perspective on long-term investing. Ready to see how dividends could potentially surpass your full-time job income? Let's paint a picture of two potential futures. In one, you're trudging through another day at your 9-to-5 job. In the other, you're watching your $100 weekly investment in SCHD grow into a wealth-building powerhouse. Which future would you prefer? A seemingly small $100 weekly investment could completely reshape your financial landscape. It might sound surprising, but let's break down the numbers and see how this simple strategy could outpace your full-time job over time. First, let's look at the average salary growth in the United States. Over the past 30 years, wages have increased about 3% annually. When you factor in inflation, it's barely keeping pace with the rising cost of living. Now contrast that with SCHD's historical performance. This ETF has delivered an impressive 12.83% annualized return since its inception. That's more than 4 times the average salary growth rate. What makes SCHD special? It carefully selects high-quality, dividend-growing companies for its portfolio. These are solid businesses with a proven track record of paying dividends for at least 10 consecutive years. This focus on reliability and growth potential sets SCHD apart from other investment options. Now let's talk about the secret ingredient that turns your $100 weekly investment into a wealth-building machine: compound interest. Think of it like a snowball rolling down a hill, getting bigger and faster as it goes. Here's a simple example. Imagine you invest $100 in SCHD and it grows by 10% in a year. You now have $110. The next year, you're earning returns on your original $100 and the $10 you gained. This snowball effect accelerates your wealth growth over time, especially when you're consistently adding $100 each week and reinvesting your dividends. So what could this look like in just 5 years? Let's compare our two scenarios. In the 9-to-5 job path, assuming a starting salary of $50,000 and that 3% annual growth we mentioned earlier, you'd be earning about $57,963 after 5 years. Not bad, but not exactly life-changing either. Now let's look at your SCHD investment path. If you invested $100 weekly for 5 years, assuming that 12.83% annualized return, you'd have about $34,689. That might not seem like much compared to your salary, but here's where it gets interesting. Your investment is now generating around $867 in annual dividends. That's extra income you're earning without lifting a finger, and it's just the beginning. The key difference? Your job income relies on your time and effort, while your SCHD investment works for you 24/7, growing your wealth even while you sleep. And remember, this is just the 5-year mark. The real magic happens as time goes on and compound interest really kicks into high gear. 5 years have passed and your life has taken 2 distinct paths. In your 9-to-5 job, you've received a modest 15% raise, bringing your salary to $57,500. It's a step up, but nothing earth-shattering. Now picture your parallel life as an SCHD investor. You've consistently invested $100 a week, totaling $26,000. Here's where it gets exciting. Your investment has grown to over $34,000. That's an extra $8,000 from market growth and reinvested dividends. But the real game changer? Your SCHD investment is now generating about $850 in annual dividends. Imagine waking up to find an extra $70 in your account each month. It might not seem life-changing yet, but it's the start of something big. Let's peek inside your SCHD investment. You're not randomly picking stocks. SCHD carefully selects high-quality companies with a history of growing dividends. Take Texas Instruments with its solid 2.6% dividend yield, or Amgen, offering a 2.9% yield. These are real businesses working tirelessly to boost your wealth. Consider the Home Depot. For 32 consecutive years, they've increased their dividends. While you've been living your life, this company has consistently upped its payouts to shareholders like you. This reliability can transform your financial future. Now let's talk about how you feel. Remember the stress of living paycheck to paycheck? Your SCHD investor self is starting to feel a new sense of financial security. That $850 in annual dividends might cover a month's groceries or car payment. It's a taste of financial freedom your 9-to-5 self hasn't experienced. The magic of dividend investing lies in reinvestment. Every dividend payment you receive gets automatically reinvested in more SCHD shares. Your money is making money, which then makes more money. It's a cycle of growth that's just beginning to show its potential. At this 5-year mark, the difference between your two lives might not seem dramatic. Your 9-to-5 self has a slightly higher salary and maybe a promotion. Your SCHD investor self has a growing nest egg and a small but increasing stream of passive income. But the trajectories of these two paths are worlds apart. Your job income relies on your time and effort. Your SCHD investment, however, is a tireless worker that never sleeps, never takes vacations, and is constantly striving to grow your wealth. It's tapping into the power of some of the most successful companies in the world. As we look ahead to the 15-year mark, get ready for some truly eye-opening developments. The gap between your two financial paths is about to widen dramatically, and you won't believe the impact it will have on your life. Are you ready to see how your financial future unfolds? Did you know that over 15 years, a small weekly investment can grow into a substantial nest egg? It's true, and today we're going to explore how a simple strategy can lead to remarkable financial growth. Let's dive into the fascinating journey of two parallel lives, one following a traditional career path and the other embracing the power of consistent investing. 15 years have passed, and the financial landscapes of our two scenarios couldn't be more different. The 9-to-5 worker has seen their salary increase to about $77,900, assuming a 3% annual growth. It's a respectable income, but when we factor in inflation, the real purchasing power hasn't changed much since the beginning. Now let's turn to our SCHD investor. Your consistent $100 weekly investments have grown into a portfolio worth approximately $183,000. Here's the exciting part. Your annual dividend income has reached around $4,575. That's nearly 6 times what you were earning in dividends just 10 years ago. To put this growth into perspective, your dividend income could now cover significant expenses like utilities, groceries, or even a modest car payment. This represents real financial freedom and security. This impressive performance is due to the power of consistency and compound interest. Every week you've added $100 to your investment, and every dividend payment has been reinvested, buying more shares and generating even more dividends. It's a self-reinforcing cycle of wealth creation. SCHD's focus on high-quality, dividend-paying companies has played a crucial role. These companies have a track record of increasing their dividends year after year, providing stability during market downturns. You're approaching the dividend threshold, the point where your annual dividends surpass your yearly investments. Once you cross this $5,200 mark, you'll have achieved a significant milestone in your journey to financial independence. While your 9-to-5 counterpart might still worry about job security, you're feeling a growing sense of financial confidence. Your money is working hard for you, creating a steady stream of passive income. It's important to note that economic factors can impact this growth. Recessions, changes in interest rates, or shifts in the global economy could affect dividend payouts or stock prices. However, SCHD's focus on stable, well-established companies helps mitigate some of these risks. The most exciting part? You're just halfway through your 30-year journey. The power of compound interest is really starting to kick in, and the next 15 years promise even more dramatic growth. Your SCHD investment is poised to accelerate, potentially outpacing your salary growth by an even wider margin. Imagine reaching a milestone when your investments generate more income than most people's full-time jobs. This is the reality for our SCHD investor after 30 years. Let's break down the numbers. A staggering $2,628,133 portfolio value built from just $187,200 in total contributions. That's over $2.4 million in growth. But the real game changer? The annual dividends of $65,450 or $5,454 monthly. Picture waking up to find over $5,000 deposited into your account month after month without lifting a finger. Meanwhile, our 9-to-5 counterpart, even at their career peak, earning $100,000 annually, is still trading time for money. Let's compare a typical day for each. Our 9-to-5 professional starts their morning with a rushed commute, spends hours in meetings, and returns home exhausted. Weekends are for recovery, and vacations are limited. In contrast, our SCHD investor's day begins with a leisurely breakfast, perhaps followed by a yoga class or a round of golf. They have the freedom to pursue passions, volunteer, or even start a business without financial pressure. This level of financial freedom opens up endless possibilities. Want to travel the world? Our SCHD investor can book a flight on a whim, knowing their investments cover expenses back home. Dreaming of a beach house? That monthly dividend could easily cover a mortgage. Interested in philanthropy? There's now ample resources to make a significant impact. The lifestyle differences are stark. While a 9-to-5 self might worry about job security or unexpected expenses, our SCHD investor enjoys peace of mind. They can afford quality health care, pursue further education, or support family members without financial strain. It's crucial to note that this wealth wasn't built overnight. It's the result of consistent $100 weekly investments over 3 decades. Each contribution, combined with dividend reinvestment, created a wealth-building snowball that gained unstoppable momentum. The contrast in financial trajectories is eye-opening. The 9-to-5 salary saw modest increases, while the SCHD investment experienced exponential growth. The dividends alone surpassed what many consider a good salary, not even touching the principal investment. This journey showcases the power of patient, long-term investing. It's not about getting rich quick, but about building a sustainable source of income that provides true financial independence. The SCHD investor's path demonstrates how small, consistent actions can lead to life-changing results, offering a level of freedom and security that many only dream of achieving. Have you ever wondered how financial freedom could transform your daily life? Let's explore the profound impact it can have on your overall satisfaction and well-being. Imagine waking up each morning without an alarm clock, your day stretching before you like a blank canvas. This is the reality for our SCHD investor after 30 years of consistent investing. Picture this. You start your day with a leisurely breakfast, perhaps followed by a workout or a stroll in the park. The stress of deadlines and office politics? A distant memory. Instead, you have the luxury of time to pursue your passions, learn new skills, or simply savor life's simple pleasures. Contrast this with the life of someone still reliant on a salary. They might earn a respectable income, but they're trading time for money. Vacations are limited, work emails never stop, and the fear of layoffs or economic downturns always looms in the background. The difference in stress levels is palpable. For our SCHD investor, work becomes optional. They might choose to start a business, not because they need the money, but because they're passionate about an idea. Or they might volunteer, dedicating time to causes close to their heart. This shift from having to work to choosing to work is transformative. The impact on health and relationships is profound. Without the constant pressure of a 9-to-5 grind, our SCHD investor has time to focus on self-care. Regular exercise, healthy meals, and adequate sleep are no longer luxuries squeezed into a busy schedule. They're daily habits. Relationships flourish too. There's time for long conversations with a partner, play dates with grandchildren, or rekindling old friendships. Financial freedom also opens doors to greater generosity. Our SCHD investor might set up a scholarship fund or support local charities. They have the means to make a real difference in their community without worrying about their own financial security. The legacy building potential is enormous. A large dividend-paying portfolio isn't just about personal comfort. It's about creating a financial foundation for future generations. Our SCHD investor can help family members with education costs, down payments on homes, or seed money for business ventures. But here's an intriguing twist. The potential for wealth expansion doesn't stop at year 30. With a solid dividend-paying foundation, our SCHD investor could explore other investment opportunities, potentially accelerating their wealth even further. The difference in life satisfaction between these two paths is stark. While the 9-to-5 worker might find fulfillment in career achievements, the SCHD investor experiences a broader sense of freedom and purpose. They're not just surviving, they're thriving, designing each day according to their own values and desires. Many investors fear market volatility, viewing it as a threat to their financial goals. But what if I told you that SCHD's unique structure can turn market downturns into wealth-building opportunities? It's all thanks to a strategy that leverages SCHD's focus on high-quality dividend stocks. Picture this. It's 2008, and the stock market is plummeting. While your neighbor who invested in individual stocks is panicking, you're surprisingly calm with your SCHD investment. Why? Because SCHD's carefully selected portfolio of financially strong companies acts as a buffer against market turbulence. SCHD's selection process is key to its stability. It focuses on companies with rock-solid financials and a history of consistent dividend growth. These aren't average companies. We're talking about dividend aristocrats, businesses that have increased their dividends for at least 25 consecutive years. During economic downturns, these companies often weather the storm better than most. When the market dips, SCHD's share price might temporarily drop. Savvy investors recognize this as an opportunity because reinvested dividends can buy more shares at a lower price. It's like getting a discount on high-quality stocks. Let's break it down with some numbers. If SCHD is trading at $100 per share and pays a $1 quarterly dividend, your $1 dividend buys 0.01 shares in normal times. But if the market drops and SCHD's price falls to $80, that same $1 dividend now buys 0.0125 shares, 25% more shares for the same dividend payout. This process, known as dollar-cost averaging, accelerates during market downturns. You're buying more of these high-quality companies when they're on sale. And remember, these are companies with a track record of increasing dividends year after year. SCHD's focus on stable, financially healthy companies contributes to its lower volatility. It often experiences smaller dips during market downturns and can recover more quickly. For example, during the 2020 market crash, when the S&P 500 fell about 34%, SCHD dropped by approximately 31%. While still significant, SCHD's decline was less severe, and it recovered its losses by the end of the year, just like the broader market. The key takeaway? Market volatility isn't something SCHD investors should fear. It's an opportunity to accelerate wealth building. By staying invested through market cycles and reinvesting dividends, you're positioning yourself for potential long-term success. Remember, this strategy isn't about timing the market or making quick profits. It's about consistently investing in a diverse portfolio of high-quality, dividend-paying companies. Over time, this approach can lead to significant wealth accumulation, even in the face of market ups and downs. Picture this. You're standing at the edge of a diving board, hesitating to take the plunge into investing. You're not alone. Many people feel overwhelmed when it comes to starting their investment journey. But what if I told you that taking that first step could be the key to unlocking your financial future? Let's break down how to begin your SCHD investment journey. Opening a brokerage account is simpler than you might think. Choose a reputable firm, visit their website, look for the Open an Account button, select the type of account you want, fill out the application, and fund your account. Once your account is set up, it's time to automate your investments. Set up automatic weekly transfers of $100 into SCHD. This consistency is crucial for long-term growth. Now you might be wondering where to find that extra $100 a week. Here are some practical tips. Review your subscriptions and cancel unused ones. Brown bag your lunch twice a week. Use cashback apps for regular purchases. Negotiate your bills, or take on a side gig for a few hours each week. Remember to set up automatic dividend reinvestment. This allows your dividends to buy more shares, accelerating your wealth building over time. The difference between starting now and waiting a few years can be staggering. By beginning today, you're giving your money more time to grow and compound. Even a small delay can substantially impact your final portfolio value. Investing isn't just about numbers, it's about psychology too. Many people hesitate because they fear making mistakes, but the biggest risk often comes from not investing at all. By starting small and educating yourself, you can build confidence along with your wealth. The beauty of this approach is its simplicity. You don't need to be a financial expert or have a large sum to begin. All you need is consistency and patience. Think of it as building a snowball. At first, it might seem small, but as you keep adding more investments, it grows larger and gains momentum. Are you ready to take control of your financial future? The first step is simpler than you think. Today, right after reading this, you could open a brokerage account. It takes just a few minutes, and it's the foundation for everything we've discussed. Imagine your future self looking back on this moment, grateful that you took that first step. Imagine waking up 30 years from now, your $100 weekly SCHD investment now paying more than your old salary ever did. This isn't just a dream, it's a potential reality we've explored. The contrast between the 9-to-5 grind and the financial freedom through SCHD investments is clear. Remember, 70% of retirees wish they'd start investing earlier. Don't let that be you. The choice is yours. Stick with the familiar paycheck-to-paycheck lifestyle, or take that first step towards financial independence today. Every $100 you invest in SCHD is a building block for your future. Why not take action now? Set up an automatic $100 weekly investment in SCHD today. Ready for more? Our next video, This 5 ETF Portfolio Will Surpass Your Full-Time Job, reveals game-changing strategies. Don't miss this chance to supercharge your financial future.